BOB, Vijaya Bank and Dena Bank would be merged. We have with us Mr. Ramesh Singh, Executive Director of Dena Bank. Mr. Singh, good morning and thank you for joining us. Do you think this, in a sense, was the only solution for Dena Bank? Because minus capital infusion or a minus this merger, Dena Bank was struggling to even survive?
It was not so. If you see the CRAR of our bank capital, we are above the benchmark required, at least CET1 is there. And bank was definitely going to turn around in maybe June 19 quarter onwards. The provisions to the extent of 65% were already made.
Before this decision was taken, or would you say this was just on the prerogative of the Finance Ministry?
It's not so. The government will take a call after studying all the pros and cons of any banking industry. And as far as Dena Bank is concerned, definitely it's a good move for the Dena Bank employees as well, because they will be going to the bank of standard of a Bank of Baroda, which is an internationally recognized bank. And the ministry, it is not that they have done only yesterday. Matter was being studied for almost a year or so, because when Manthan took place, it was decided that few of the banks would get consolidation.
You got any sense as to what could be the swap ratio?
That is yet to be decided, because it will take time. First, we have to go to the board and get the approval for this consolidation, and then it's a matter of time when we sit across, and then the ratios will be decided.
Mr. Singh, do you sense though that the merger will go through smoothly, or do you sense any resistance from employees or unions?
Naturally, there will be some resistance from the employees, particularly unions. They will definitely resist, because question is of identity, a bank of say as many years old bank and all. So there is bound to be some resistance from the employees.
Okay. Could you broadly tell me your communication with the Finance Ministry? Have they indicated that all the existing employees of Dena Bank will be absorbed, or there could be some layoff at Dena Bank?
See, if you read through the yesterday's message given by Secretary Mr. Rajiv Kumar, as well as by our Honorable Finance Minister, it has been categorically told that no employee will be put to any kind of inconvenience, or no retrenchment will happen. It will be very categorically told by the ministry as well.
As per the last reported numbers, where is your Tier 1 capital? What is the...
It was 10.04, and Tier 1 was 8.04%.
And what was your last reported NPA?
It was 11.04%.
Okay. Are there any cross accounts between BOB and Dena Bank which are common, and once the merged book may not look that different? What I'm trying to understand, is there any consortium lending which you were part of with BOB, and that in a sense will just make the amalgamation of the books slightly easy?
With Bank of Baroda, our consortium leader, hardly few accounts, maybe hardly 4 or 5 or 10 max. That to a very small scale.
What clarity have you been given about what role you will play in the merged entity, Mr. Singh, and would you be a board member?
Yet this is not yet decided, but naturally we are being the whole-time directors, board members, because all the 3 banks put together will be a big entity. So government will take a call.
Just one more question, and I'll not extend my interview after that. When the merger of SBI Associates happened, it came at a cost for SBI, and SBI had to do a lot of write-offs. Now, even though banks, they follow an RBI guideline, do you expect that when the book of BOB, Vijaya Bank and Dena Bank would be merged, the NPA picture for Dena Bank could change drastically, because the practices what BOB has followed, Dena Bank may have not followed the same practices?
Sir, if you see my provision coverage ratio, is already 64-65%. So most of the things we have already taken care, 35% remaining. Naturally, because this provisions are to be made gradually, year-wise, depending on the age of the NPA. So naturally, in such process, Bank of Baroda will definitely get some good advantage, because Dena Bank is having 41% CASA, whereas they were having 34%. Vijaya Bank is having 25%. So new entity will be having quite good amount of CASA.
Mr. Singh, so exactly how long would this entire merger process take? Could you give us a timeline? What happens next?
Yeah, to us it appears, first of all the board's approval will be obtained in the next couple of days, maybe a week or so. And then I feel it should not take more than 3 to 6 months total.
Okay. Your net NPAs, as we understand, Mr. Singh, are at about 11%. What are your total stressed assets and how much recoveries can be expected from the stressed assets?
Our stressed assets, particularly those who have been referred to NCLT especially, they are 3,900 crore. And we expect around 35 to 40% recovery. And already we have made the provision to the extent of 60% in these accounts.
Okay, Mr. Singh, appreciate your time. Thank you for joining us.
You're welcome. You're welcome.
Well, that's a big exclusive, the big bank merger, Dena Bank. Well, the story is very simple to understand. Government is moving, as indicated in the past, towards banking sector consolidation. 2 strong banks would be merged with 1 weak bank. If you're a shareholder of Dena Bank, look, you will be getting a pie of a stronger bank now, assuming that the current deal actually happens at the current rate. If you are a shareholder of Bank of Baroda, well, you will get size and you will get better reach, but this entire merger will come at a cost which in the short term is going to be disruptive for BOB and for Vijaya Bank. But frankly, this is in line with what government should have done a lot earlier. There is no way, with the kind of economy we have, and with the private sector banking and the fintech and everything coming through in the financial sector per se, you have over 20 PSU banks. So the consolidation in the banking sector was long and pending, but you have to understand it from the prism of what it means for Bank of Baroda shareholders. For Bank of Baroda shareholders, 1 big bank and 1 strong bank would be merged. There would be uncertainty about how books would be merged, what will happen to other merger related issues. The simple example here, Aisha, is that when State Bank of India merged their subsidiaries, and those were subsidiaries of State Bank of India, it came at a cost. It depressed numbers for State Bank of India for a good 12 to 18 months. So I think a similar kind of a factor would be at play, where because of this merger, Bank of Baroda may get size, they may get reach, they will get market share, but this merger will come at a cost. So assuming that the swap ratios would be in line with market action, though the valuation difference may not be large, but there would be this whole element of uncertainty which will happen for Bank of Baroda. Then which are the other banks? Can Bank and Union Bank, I don't think they have the balance sheet sides to gobble anything else up. State Bank of India associates have been merged. So I think the fear that other banks also be merged soon, I think is fairly unjustified for the moment.
Yeah, but my only point is, from a shareholder perspective of BOB, today you're going to see a negative reaction because you're also taking all the bad debt, like Mr. Singh was just highlighting, onto your books. And it's going to take time to clean up.
It will take time to clean up, but your loan book increases, your size increases,
and reach.
Your reach also increases. So, if the economy turns around, some of these loans would be able to, materialize very, very smartly, because this merger will not happen at 3-time book. It will happen at half-time book or 0.7-time book. So it's not like you're buying a bad asset at a very rich price. You'll be buying a bad asset and a good asset at a throwaway price. But yeah, there's this uncertainty as to how the merger would move, what will happen to return ratios, because Bank of Baroda was just on the verge of turning around, independently. This changes the equation suddenly now.